Welcome, ladies and gentlemen, to a new episode of the Burn Your Boats Wealth podcast. This is going to be our short form today. This is just David. I'm on my own. And today I'd like to discuss something that I've discussed hundreds of times with investors over the years. And the topic overall that I'd like to kind of break out on is learning, studying, reading, listening to podcasts, educating yourself, going to meetups, going to meetup groups, and surrounding yourself by the people who are doing the thing that you want to do. Because all you're doing, and it's amazing that you're doing it, but all you're really doing is just storing up a type of potential energy. Nothing is yet realized. And I know a lot of investors who have read all the books. They go to the meetups. They go to the groups. They have listened to every single podcast, and they can quote you every term, every little hack. They can quote you interest rates, bond yields. They can quote you everything, and yet they don't do anything. And because knowledge and information are just a form of potential energy, if you will, potential profits. But if you don't do anything with this information, you may have the information, but if you do not have that burning, driving ambition in your belly to turn that knowledge into kinetic energy, where you're actually implementing the things that you've learned, because you don't learn from books. You can get a sense of what things are, but you will never know what it is like to buy a distressed property, renovate it, and fix it up, and either sell it or keep it unless you do it. You can imagine it. You can think about it. You can say, yeah, I'd imagine what that's like, but you will not learn the doing of things until you convert potential energy to kinetic energy. And that's what I'd like to talk to you today about. And I'm going to lay it out. I'm going to cast my mind back to when I had a lot of potential energy. So I spent 4, 5, 6 years learning real estate by being essentially an employee, if you will. And what I mean by employee, whilst I was self-employed for most of it, I had clients. And what I'm talking about is we would run around the world, we'd find developers who wanted to sell their properties, and then we would connect those developers selling their properties to investors all over the world who wanted to buy those properties. So at the end of the day, I was serving those clients, okay? But I was personally taking no risk. If the development that we chose to sell sold, we made money. If the development we chose to sell did not sell, or we were not successful, or we weren't fully bought into it, guess what? We would make no money. And so the risk always was our time, but it was never like mortal risk. I never had to, all my life savings, put a personal guarantee for $1 million down on things. And so there's this gap for most people where if you go to work every day, if you get paid for performance, the risk is your time, the risk is your reputation in your career, but it's not this mortal risk that if it goes wrong for something outside of your control, it could be macro interest rates change, and all of a sudden your deal is not going so well, or it could be supply and demand changes and your deal is not going so well. And that's a big risk. And yet that to me was the hardest challenge that I ever encountered in my growth. And we're always, any self-employed person will tell you that by and large, we're always at the precipice of risk. And so let me give you a good example. So I'm sitting in and around 2012, 2013, 2014. We were taking down, essentially, we were getting control of apartment complexes and condo complexes here all over Florida. and we were selling them out to Europeans. But we didn't have a lot of skin in the game in that we were finding these deals and we were putting them out to our investors, and everybody was a winner, right? However, I had this burning ambition to be the principal. I wanted to be the person that was selling the property. I wanted to be the owner of the property because I could see from all of these transactions that the owner of the asset was the person who was fundamentally in control of it. In that, when you, like, we just talk about a single house now, when you own a flip, I decide what contractors come into it. I decide who I'm going to hire for it. I decide who's on site. I decide what the design's going to be. I decide if I'm going to furnish it. I decide if I'm going to rent it. I decide if I'm going to sell it. And even if I decide to sell it, I'm going to decide who I sell it to, right? And so that's a reasonably powerful place to be on the grand scale of coming from just a middleman to being control, being what they call the principal of the deal. But there is a huge, huge gulf in the amount of risk you take on from jumping from what I'm going to term, just for want of a better reason, a W2 type of mindset or a low risk mindset to taking on those first deals. And what really I recall listening to the very first 100 episodes of the Bigger Pockets podcast with Josh Dorkin was there, and they were talking about stuff. I remember reading Rich Dad, Poor Dad, and I knew in my heart of hearts that I had to somehow, some way navigate and get to that first deal. And so I'm going to walk you through it. And so I'm preparing myself. I'm preparing myself. I'm learning. I'm reassuring myself. We in our day-to-day business, we were still selling real estate, so I was pretty confident that the real estate market was there. But still, a massive, massive big deal to go from taking on no risk to saying, okay, I'm going to buy my first deal, my very, very first deal. I'm going to buy it. I'm going to renovate it. I'm going to fund it, and I'm going to sell it. And so, how do you become, let's say, a fix and flip person that's doing 100 plus deals a year? How do you go from doing one deal to 100 deals? And then you can look back in hindsight and have this conversation right now. And so that very, very first deal, it's a necessary journey. I got together with a friend of mine who was able to buy houses in foreclosure. And I said, okay, I'll give you 50% of the deal. I will put my money, I'll buy it, I'll fund it. You go find it. You go bid on it, and I'll do all of the renovation, and then I'll oversee selling it, and I'll go 50-50 with you. Now, it doesn't take a genius to know that my partner in those deals was taking very, very little risk because of my money. He was going, but he had knowledge. He knew how to turn that potential knowledge into kinetic information and actually bid on deals. And so I went ahead and I did this very, very first deal. I remember it well. I get in here and, nothing nice about buying your first foreclosure home. You get in there, you've got a crowbar open the front door and off you go, you're in, and you're starting from there. We bought it, and I was scared. I was just scared of every step of it. We got a roofer in, and we were getting 3 bids for everything. And this is what you don't have your team yet. You don't have, so it was all very full of friction. We got a lot of different roofers came and went. We had like different plumbers and electricians and whatnot. But we walk away from that first deal. We get it done, and we sell it. And it didn't sell quite as quickly as I wanted to. And so that takes your confidence away from, I'm going to scale. Because a lot of people that got into real estate in 2018 and 2019, they have never seen a market where the demand on the sales side was not there. So 2012 and 2013, there wasn't a great deal of demand for single family homes because people with bad credit scores or lower credit scores than 700 were not getting a mortgage. And so Takes us a little while to get it sold, and so I do it again. I get back with my partner. I say, let's do this one more time. We bought a second one, and we go through that whole process. And the second time, I sold it a little bit easier to my own personal database. The people who had bought our condos before, they're like, yeah, I'll take one of those, right? Um, but by now, I'm identifying. There's a good roofer. There's a good plumber. There's a good electrician. You know, this is a good general contractor I've got here. And now I understand the numbers. Now, because I've got the evidence that I've done one deal. So the second deal came in and it aligned pretty closely to the first deal. And so I always allude to like your first deal, that's the bitch of the bunch, right? And you're going to spin, just think about like spinning plates on a stick, right? You're going to get one plate, you're going to spin it on the stick and off you go, right? You got to wait for that to get fully through its whole life cycle until the day it's sold. You're not buying another property. You're not even thinking about buying another property. You're just doing that once. But guess what? You do it on your second and you go through the whole life cycle again and you get it sold and you get a little bit better and it's a little bit less frictionful, right? And then so we say, okay, I'm ready to do a third. So we did our third, right? And now I'm doing that third one, and I'm kind of getting to the point. I'm like halfway through that renovation, and it's going very smoothly. I'm like, a deal comes along. I'm like, yeah, I can take on two at a time. Imagine that, two at a time. And so then we have one closing and one opening. So we've got two deals going at the time. And I remember we stayed at that like two, maybe three deals stage for about a year. And the problem was is that the partner that we were using to acquire our properties just wasn't plugged in, wasn't really. So we had to learn how to buy houses in foreclosure, and we had to learn how to acquire houses ourselves. So we took that responsibility on and we went out, we took control of the whole process. And it's amazing how you go from one and full life cycle to doing another one, full life cycle to doing a third one, full life cycle, and then you get to like, oh, I can do two at a time. And this is where life tends to get exponential. You do two at a time, and then you realize you can do three. You can add another spinning plate. But then you go from three to like five because there's no extra work. It's just more text messages. It's actually easier to scale. They go from 5 to 10 at a time. You're from 10 to 20 at a time. And all that you need really then to grow is access to a different form of capital. And the irony is a lot of your current investors will want to provide you with that capital. And so the capital's ironically enough all around you. I didn't use a hard money loan, I'm going to say, until I had done my 400th deal. We just used friends and family. And just every time we wanted to do an extra deal, we would just take the profits for the last four deals and we'd buy the next one ourselves. So we self-funded. We went from $0 to not zero. We went from around $90,000 is what the original investment of the whole flipping business was. And we'd got that 90,000 from selling condos. We put that in on our very first deal. That's where we got the money. We self-funded it from our day-to-day business, if you will, that didn't make a huge amount of money, but it kept us afloat. But that first 90 went to 130 on the first deal. That 130 went to 160 on the second deal. So now, we do the third deal. Now we got, that 90 goes to 210. And they were buying houses at the time for like 70, 80 grand. So now we could afford, without taking on any more debt, to do two houses, to do three houses. And when you are doing two houses, your profitability doubles. When you're doing three houses at the same time, you add another 30%. And so every time you do more deals, you get more capital. Every time you get more capital, you could grow your portfolio without taking on any debt. And so that's how we grew the fix and flip world, just by doing, by learning. And we started off with the tiniest amount of money, but we just did it once. kept the profits, rolled them back into the next one. Did it twice, did it 3 times. And the rest, as I say, is history. But if you're at home right now and you're struggling with what you want to do next with your life or where you want to go next because the markets are all changed, careers are changing, AI is coming in and upsetting things, and you're learning and you're listening to podcasts, I implore you, put down the education, put down the podcasts, pick up the phone and actually start doing things. Whatever that might be for you. If you want to start a new business, start the new business. If you want to invest in something that you're just cautious about, invest in the thing, right? Do your homework, but then do the thing. So like right now, I am in the private lending business because just evolutionary aspects of what I think my investors want. My investors want more passive income now. I didn't know that back then. I didn't know it when I was doing my first flip. I thought investors wanted real estate to own. So I provided that. But it's only as I've gotten older that I can see, okay, this is what my 45 and 50-year-old generation, they wanted to build, assets. When you get into your mid 50s and beyond, you want to build income. And so it's just this evolutionary viewpoint. So I've put myself back into this place of I have all the knowledge and I've done a bunch of private lending myself at home with my own money. But now that I'm working with some friends and colleagues and funding loans that way, it's all about starting again, doing one deal, doing one loan, then doing 2 loans, then doing 4 loans. And so the point of this today is start with one. Do one thing and start with it and get it done and put down the books, put down the podcasts, do the one thing, and every bit of scale and every bit of success that you will ever experience in your life comes from that one thing. And so I wanted to leave that there. Information and knowledge is just potential. Thank you so much for tuning into today's episode. Look, we truly appreciate your support and hope you found the conversation insightful and engaging and useful. If you enjoy the show, because there's a lot of shows out there, would you please take a moment to rate and review us on your favorite podcast platform? Your feedback helps us grow and reach more listeners. Please go ahead and subscribe so you don't miss the next episode. We hope you enjoyed today's show. Thank you so much.
You've been listening to the Burn Your Boats Wealth podcast with Clark Lunt and David Shaw. We would love to hear from you. Please reach out at contact@burnyourboatswealth.com with comments, questions, and if you have a topic you would like Clark and David to discuss on an upcoming episode. We would very much appreciate it if you took the time to rate and review Burn Your Boats on your favorite podcast listening app, and make sure to follow and share on social media. Content in Burn Your Boats Wealth podcast is for entertainment purposes only and is not legal or financial advice. Please review our legal disclaimer at burnyourboatswealth.com. Thank you and have a great day.